Good afternoon, people. Welcome back to the Daily Crypto Sherpa News. I'm your anchor, Paul Bucci, here to bring you all the news you need. In today's video, we got hedge funds feeling FOMO. Bitcoin and Ethereum transaction gas fees are going lower for some reason right now. Gemini acquire, what did Gemini acquire? They acquired ShardX. And also China has some of their search engine blocking some websites and exchanges. All that and more. Let's roll that intro. Yes. Okay, welcome back. So before we dive right on in, please give this video a thumbs up, share with your friends and whatnot, and subscribe. Oh yeah. Alrighty, let me share the screen with you, show you what I got going on up here. Boom, bam. All right, so we're going to be starting off with hedge fund billionaire Mark Lazarus wishes more Bitcoin to accumulate. Fun stuff. Alrighty, make sure we got the right screen. Awesome, perfect. Okay, so in an interview with CNBC on Tuesday, June 8th, Mark Lazarus, the founder of Avenue Capital Management and owner of the Milwaukee Bucks, acknowledged that Bitcoin had grown much faster than he thought it could. He stated that he should have purchased a lot more coins earlier. I think the probability as more and more people start using Bitcoin is that it's going to keep going up. It's happened a lot quicker than I thought it would. I should have bought a lot more than that was my mistake, he said. In the past, Lazarus had predicted that the price of Bitcoin could surge past the $40,000 level. When asked about his past prediction and commenting on where the leading cryptocurrency stands, Lazarus stated that once the market is built, it is there and unlikely to go away. Once a market is created, that to me was the reason why I thought I was interesting on Bitcoin. And I thought that as soon as you add institutional investors coming at it, the price would move up, Lazarus said. The US billionaire investor is bullish on Bitcoin's long-term situation because of its establishment market. In July 2018, Lazarus had an interview with CNBC where he successfully predicted that Bitcoin would climb to the $40,000 level within a few years. As it becomes easier to trade and more acceptable, he also indicated that individuals who invested in the digital asset would accumulate 5 to 10 times their money in 3 to 5 years. During this time, the leading cryptocurrency was trading below $7,500. In 2018, Lazarus regretted not purchasing Bitcoin a few years ago, stating that he should have bought the digital currency when it was $300 just a few years ago. Bitcoin to continue its uptrend. The extreme volatility in the price of Bitcoin makes several investors wary of investing in digital asset. However, others see it as owning a venture capital-backed asset since the cryptocurrency has obtained more acceptance as an alternative asset. Mark Lazarus is bullish on Bitcoin and believes that the crypto price will continue to rise together with its usability. He is optimistic about the increased number of institutional investors adopting cryptocurrency. Lazarus' day job involves running Avenue Capital Group, debt investment company. He helps start and operate the firm. Currently has about $9.6 billion in assets under management. Lazarus also has Bitcoin investments that he said he has made with his personal money. Besides running Avenue Capital as CEO and chairman, Lazarus owns a stake in the NBA's Milwaukee Bucks. So yeah, another billionaire is feeling FOMO. So as he said it, he wished he bought some more later on. Why don't you buy some right now? Just give it a little try. It's on PayPal. It's on Venmo. It's probably even on your Robinhood if you got some stocks. Just give it a try. Buy $1. Buy 2. Watch the fluctuation happen, and I'm sure it'll speak for itself. Alrighty, let's move on to our next article. It's official. Bitcoin is a legal tender in El Salvador. That's right. As of today, earlier today, Bitcoin was officially voted into the legal tender of El Salvador. It was a couple of days ago that they tweeted that they were about to get into it, but today was the vote on it. The small country of El Salvador has moved forward with its plans and has done well on its word to accept Bitcoin as a legal tender. The president of El Salvador, Nayib Bukele, has taken it to Twitter to share that the law which officially turns Bitcoin into a legal tender in the country has been passed by the supermajority decision. In total, 62 out of 84 votes win to favor. The Bitcoin law has been approved by a supermajority in the Salvadorian Congress. 62 out of 84 votes. History. Hashtag BTC in the tweet. For those wondering, for Bitcoin to be accepted as legal tender means that no one has a right to refuse BTC for payment. Even though plenty of countries have many providers accepting BTC, El Salvador becomes the very first country to do so on a national level. The move further legitimizes BTC as currency, and many experts believe that it sets this tone for others to follow. That is so true, because as we've seen in the past couple of days with the news articles, like it is moving forward. So we ought to move in with it as well. Like I'm using it. I paid my dog's vet bill with it. Get a Litecoin card. I should put that in the description down below. I'll remind myself to do that later. I'll just do a full video review on it. Yes, be ready for that. Alrighty, let me move on to our next article. Bitcoin and Ethereum transaction fees 95% from all-time highs. So why is this happening? I wonder. Let's take a look, but let's take a look at this picture of artwork. Like, what's going on? We got like honeybee comb surrounding a lady. I don't get it. That's weird. But okay, let's get into this article. Bitcoin and Ethereum transaction fees sink 95% from all-time highs. Reduced network activity is resulting in lower fees for Bitcoin and Ethereum as both recede heavily from their all-time highs. The cost of using Bitcoin and Ethereum blockchains is on the rapid decline, as evidenced by a 93 to 95% reduction in average transaction fees over the past couple of months. Fees are paid to the miners who process transactions on a typical proof-of-work blockchain. The size of the fee depends on the size of the transaction in bytes and how many transactions a coin has gone through. In the past, as these needs to be checked every time a coin is moved, supply and demand for space also dictates the size of the transaction fee, since blockchains have limited capacity. Both Bitcoin and Ethereum saw their transaction costs surge to all-time highs in 2021 of April and May, respectively, coinciding with their rising coin valuation and price peaks. Bitcoin average transaction fee hit $62.77 on April 24th, a figure that exceeded the $55 all-time high from December 2017, which stood for more than 3 years. By Sunday, fees had fallen as low as $4.38. That marked a 93% reduction and sent Bitcoin's average fee back to levels not seen since December 2020, prior to 2021's market pump. The same general pattern was witnessed on Ethereum, while average transaction fees rose as high as $69.92 on May 12th. That was another all-time high for the cost of using Ethereum and was undoubtedly fueled in part by the fury of activity that accompanied the launch of decentralized finance and the Uniswap exchange, which has long been the biggest consumer of the resources on Ethereum. On Sunday, Ethereum's average fees were as low as $3.44, a figure not seen since the first day of January 2021, amounting to 95% reduction. Fees on both blockchains tend to jump whenever there is a sudden increase to the coin's price or a new application that increases the network. Historical increases to transaction fees sources are from blockchain. As reported previously by Cointelegraph, the transaction count on both Bitcoin and Ethereum is also on the decline. Between January and June, the daily number of Bitcoin transactions fell from around 400,000 to just 175,000. Likewise, the number of daily Ethereum transactions fell from 1.6 million to 1 million between May and June alone, making a 37.5% drop. Wonder what's going on there. In my mind, I'm thinking they must be hodling, not selling. These people must know what's going on and what's going to come in the next couple of years. So yeah, we're going to see that a lot more, where people might not be trading these, because Bitcoin is just going to be a hold of value in my eyes. And also, Litecoin is going to be the spending one, because with all issues of all coins right now, we're having a privacy issue. If you want to use Bitcoin as single tender and you pay for a coffee, then that coffee transaction shows every single Bitcoin in your wallet, because we're on an open source. But once Mimblewimble technology comes in, that hides that transaction fee. Now no one can see it, but see what's in your wallet and how much money you actually own. So that's going to be a cool thing to have. So that's why I feel Litecoin is going to be spending. Bitcoin is going to be more of a monetary value, store value. And every other altcoin, they better have a good purpose. Alrighty, let us move on. My bad, people, my bad. Chia farmers are snapping up hard drives in Europe. After causing hard drive shortages in Southeast Asia, Demand for HDD and SSD to farm the proof of space cryptocurrency has spread to Europe. Very interesting. Let us take a closer look at this. I always love looking at the artwork. A bunch of hard drive disks, of course. So in brief, the European market for the hard drive has seen a surge in sales following the launch of the Chia cryptocurrency. Chia uses a novel proof of space and time consensus mechanism that relies upon storage space instead of processing power. Proof of space cryptocurrency, Chia caused a run on hard drives in Southeast Asia ahead of its launch. Now sales of the hard drives are soaring in Europe. According to a report by research from Firm Context and Chia, it's the main culprit. For sure, it is Chia. Gervin Meyer, an analyst at Context, told IT Publications, the Register, according to Context report on the European computer storage market, sales of enterprise-grade storage drives over 10 terabytes grew to 200,000 in April 2021, increasing 240% compared with the same period the previous year. Sales on NAS, consumer-grade HDDs, rose to 250,000, a year-on-year increase of 167%. And sales of surveillance disk drives rose by 116% year-on-year to 200,000 units, although there has been no specific event in surveillance to cause the growth, Meyer told the Register. Although economies opening up and cloud providers improving their infrastructure have played a role, Meyer attributed the lion's share of the hard drive boom to Chia. It has taken everybody by surprise following the launch of Chia. Meyer added, noting that he expects the effect on the market to be long-lasting. Even Western Digital and Seagate were not expecting high demand like this. The global spike in consumer storage sales has been attributed to the demand caused by Chia, a new cryptocurrency that claims to be more environmentally friendly than Bitcoin. Where Bitcoin uses the proof of work consensus mechanism, which requires miners to run powerful computers to solve mathematical problems, Chia uses novel proof of space and time system that relies on unused storage space. The consensus mechanism sees Chia farmers taking out 100 gigabyte plots on their hard drive, which are filed with hashes when a new block is added to the blockchain. Its hashes compared with the hashes on farmers' drives, and the closest match receives the block reward. Chia's launch has prompted a surge in demand for the computer storage required to farm the cryptocurrency, leading to shortages of hard drives in Southeast Asia ahead of its launch and causing hard drive manufacturers' stock prices to spike. It's not the first cryptocurrency to spark hardware shortages. Ethereum miners have snapped up the GPUs used to mine the cryptocurrency, prompting the manufacturers to introduce restrictions to their graphic cards to limit their utility for miners. Although Chia farming requires much less energy than Bitcoin mining, it still has an environmental impact. It invariably requires some electricity to be used, while some critics have raised concerns that Chia farming can trash computer storage. For some odd reason, Chia burns out hard drives is getting repeated as a fashionable FUD. This is odd because for the most part, it's just plain wrong thread. Although Chia creator Bram Cohen has dismissed the claim as a fashionable FUD, German cloud service provider Hetzner has banned crypto mining on its servers on the grounds that Chia farming could lead to premature breakdowns of its storage. And moving on, and if Chia proves to be a success, other cryptocurrency could follow suit, said Meyer. Proof of space is a relatively new consensus mechanism, but any number of new currencies could also choose to use it, he said. Should the method gain popularity, the demand for storage could increase even further. Okay, so there you go. We have a shortage of hard drives because we've seen it before. It's happened, but I'm not worried about this coin too much. If you believe it, go and do more research on it. This is the first time I'm hearing about it. I'm looking into it, but just straight off the bat, like for what they do, it's not really a good purpose. When I look at coins that must have a good purpose, Theta solves the internet issue, which we did have an internet shortage the other day. So I was like going, Theta could solve that. Divi, crypto made easy. Anybody, even a toddler, can set up a masternode with that. And they're based in Costa Rica. And what's been happening in South America? It was made legalized tender, so I really want to know what's going on there. Litecoin, Wimble technology, keep your money private, and Bitcoin. It's just the king of all cryptos. So yeah, if you want to go in this, people, go on. You just do your research and be sure you truly believe in it, that it's going to work, and just always do your research. That's all I can say. Do your research. Alrighty, let's move on to our next article of the day, which is Gemini acquires crypto custody of startup Shard X. Ooh, let's take a look there. Here we got a nice little picture of the Gemini places. This must be taken in. Where is Gemini even based? I should really know that. I don't use their exchange, but I should really look into more Gemini. Let's do a review on them. Okay, dokie. Let us go back into it. Gemini. Blah, 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 blah. And in a quick take, Gemini has bought, let me close that ad. Gemini has bought a crypto custody specialist, ShardX, for undisclosed sum. This is a Gemini's third acquisition after NFT marketplace Nifty Gateway and crypto credit card firm Blockrise. Crypto exchange and custodian Gemini has acquired crypto custody of startup ShardX for an undisclosed amount. Announcing the news on Wednesday, Gemini said ShardX's multi-party computational MPC technology would help increase the speed at which it can transfer customer assets and increase usage of assets on its platform. Integrating ShardX's MPC technology into Gemini's custody enables us to meet the current demand for the fast withdrawals interacting with DeFi staking or the transferring of digital assets with greater efficiency. Gemini COO Noah Perlman told The Block, MPC is a cryptographic technology, which he said to be fast and more secure in MPC private keys, or more secure in MPC. Private keys are never constructed in full, removing a single point of failure. MPC breaks up private keys into shards or parts and distributed them between various parties to execute a transaction. ShardX's technology in particular uses MPC technology on Entrust and Shield hardware security modules, HSMS, and the firm claims to provide benefits of both these technologies, i.e. accessibility of hot or online wallets and security of cold of offline storage. ShardX was founded in 2018 by Yaniv Nunir, Nikita Lesnikov, and Navajo Dewet. In London, with Gemini's acquisition, all three members, i.e. ShardX's entire headcount, will be joining Gemini's UK affiliate, Perlman told The Block. Perlman declined to disclose the deal's financial terms, including whether this was equity, cash, or a mix of both. But he said the deal was advised by an internal strategy team that focuses on mergers and acquisitions. This Gemini third acquisition, after buying NFT marketplace Nifty Gateway in 2019 and crypto credit card firm Blockrise earlier this year. Crypto deals, especially in the crypto custody space, are growing at a fast clip. Last month, Galaxy Digital agreed to buy crypto custodian BitGo for $1.2 billion in cash and stock, the first $1 billion deal in the crypto industry. In March, PayPal acquired crypto custody specialist Curve. As for Gemini, it is looking to invest in more companies, Perlman told The Block without disclosing areas of interest. Gemini recently launched an investment fund which aims to back early-stage crypto projects and startups. So there you go. That's what Gemini is up to, moving on and adding more stuff in their network. So cool. Way to go, Winklevoss twins. You guys are awesome. All right. Last up, 2 more articles to go. Most Australians, millennials, have given up on pricey real estate investments for crypto. Ooh, so that's cool. Let's take a look at this. Look like a tweet like for that. What is that? Like a house and a text message, and what's behind it? I don't know. Alrighty, let us see what's going on in Australia. So young Australians now prefer digital asset investments to real estate investments or stacking cash in banks. At the same time, 4 million Australians plan to buy digital currencies in the next 12 months. Third of who are millennials. This is according to the results of a recent survey done by YouGov and commissioned by the Kraken crypto exchange. According to the findings, 31% of Gen X, of those born between the mid-60s and early 80s, and 24% of Gen Z, or those born between the late 1990s and 2010s. Oh, look at that. I'm a Gen Z person. I just realized that. Regarding crypto investments as better alternatives to purchasing the real estate, 22% of millennials, or those born between the early 80s and mid-90s, prefer buying cryptocurrencies to stacking cash in banks. In contrast, half of the surveyed baby boomers said they are not invested in crypto due to its volatility. This data comes in the wake of rising real estate prices in the country, which is encouraging the young generation to look at other forms of investing. Jonathan Miller, Kraken Australian-based managing director, said much of the crypto demand in the country come from the young generation. Australians still maintain some conservative attitudes toward investment. Miller said in the report, property has been a cultural norm and high on the wish list for the most investors. But as affordability continues to be an issue, we're seeing more young people look for other options to grow wealth. 1 in 5 young people said crypto can help them save for a home or property investment deposit. About the same number said they could use the superannuational balance to invest in crypto. 35% of millennials hope to use retirement savings to buy cryptocurrencies. Already buying crypto, already 20% of the surveyed 1,027 Australian nationals are buying digital currencies. The survey found out that 34% of the millennials and 32% of the Gen Z are already buying cryptocurrencies. Further, 1 in 5 Australians have owned crypto at some point, and 14% of them are still hodling. Most hodlers said they intend to increase their assets in the next year, according to the survey. However, most of these said they plan to sell cryptocurrencies during the next year. Most of those planning to buy digital assets next year are men at 27% compared to women at 14%. 47% of all those who plan to invest more in digital currencies in the next year earn more than $100,000, while 24% earn below $99,000. So yeah, there you go. Millennials and Gen Z are getting into it. But what I didn't like about the comment down here, where was that? Let me go. Let me zoom in over there. Go back over here. Most haulers said they intend to increase, but however, most of these said they would plan to sell cryptocurrencies next year. Why would you want to sell them, people? When you sell, that causes a taxable event to happen. So you're losing money on the sell, but you may have made some money, which is good, but why cause that taxable event? Just find a way. There's plenty of crypto cards out there to spend your cryptocurrencies. So yeah, do some more research, people. Hodling is great. You're getting there, but you're just so close there. Just take that next step. Do some more research. All right. So lastly, let's end on this. Breaking: Chinese search engines block Binance, Huobi, and OKEx. Boom, look at that little artwork. China with a lock and key. We're not getting in here. Nope, you ain't searching for that. Let's see, was that a tweet from that? From Yuri Mochan. Various sources report that all search engine platforms in China have blocked results for major crypto exchanges. Search results of Binance, Huobi, and OKEx crypto exchanges have been blocked on all search engines in China, such as Baidu and Sogu. This was shared by Chinese blockchain journalist Colin Wu and 8BTC News Portal. Breaking on June 9th, all Chinese search engines such as Baidu and Sogu have blocked the 3 major exchanges on Huobi and OKEx, as you can see right here. Weibo, the Chinese analog of Twitter, has also blocked search results for these exchanges. This seems to be a continuation of the crypto ban that China recently resumed. As reported earlier today, the authorities of the Xinjiang province in China have ordered crypto miners to suspend their operations. Colin Wu reports that some miners are ignoring the requirement, though, and are watching the development of the situation. Xinjiang is a China strategic energy region due to its largely supplied natural gas, coal, and other fossil refuels. Oh, that's just related news going on. But yeah, so China's banning search engine. What are you doing, China? What's going on? But China, do your thing. I'm sure they're collecting, just trying to ban it from their people because they want to be the ones in control of this. But good luck. Good luck. All right. And lastly, we always like to end on the current coin market cap. Bitcoin is up 37,300. So they're up 12%. Way to go. Ethereum's up 4% at $2,583. Binance is up. Yeah, we're back in the green. Looking very nice. Litecoin's at 171. Theta's at 916. I want to see TFUEL. Yeah, there we go. TFUEL, 61 cents. Still holding strong. And who are the gainers of today? Let's find out. Bitcoin Gold is up 52.52%. Interesting. Kusami KSM is up 24%, and Bitcoin Diamond 27.14. Ooh, oh man, all these Bitcoin alternatives. Good luck. All right, and lastly, we end on the crypto fear to greed index. Yesterday, we were in the quite low of extreme fears as a 14, but today we moved up in extreme fear to a number 21 spot. That's not so bad. We're still in extreme fear, which is good to buy. Keep collecting, keep stacking those sats. But for those of you who know, when we're in extreme fear, that can be a sign that investors are too worried, and that could be a great buying opportunity And also, when investors are getting too greedy, that means the market is due for a correction. So that's why I always love paying attention to the crypto fear to greed index. If it ever gets too close on that green side, I'm hodling and I'm just going to see where that market goes. Am I going to take some profits, or am I just going to hold it until the next run? And there you have it. So crypto news of the day. It wasn't so big, not too bad. But yeah, for those of you stuck around, thank you so much for watching. Please share with your friends. If you're trying to learn about the crypto space, scan that QR code up there, take you straight to my Patreon. I am going to be uploading a Bitcoin white papers video soon. I did the recording yesterday. I'm just in the process of editing. So again, thank you so much for watching. I hope you're having a great day, great evening, great night, great morning, and just everyone's happy and safe. So as always, stay classy, and the Sherpa is out. See ya.